Good morning, everyone. Today is Tuesday, October 25th, and I'm Michael Boutros. Welcome to this live intraday strategy webinar on SB Trade Desk. Great to be with you here this morning. Eileen, Adam, Simon, Robert, Pooja. Message here from Michael says, hello from the future here in Sydney, Australia. Happy to be here. My first official SB webinar. Been following you on the public ones for the past few weeks. Love your analysis and mentorship. Thank you. Mike, I'm humble. Thank you so much, and it's great to see you on board, my man. Welcome. Adam, Eileen, always great to see you, and good morning to you as well. So let's jump right in. Relative performance of the greenbacks so far, you got a split decision. Aussie and Kiwi with some nice rallies and overnight trades. Swissy, Yen, CAD, all the biggest losers so far in the session. Heading into the U.S. Open, we're pretty light on data, but we do get a host of commentary from central bank officials. So looking over the docket, I attached this to Sunday's update, guys. You have the Carney, who's on tap at 10:35. Later at 11:30, get the ECB President Draghi, who's going to be speaking in Berlin. Then you get the Fed's Lockhart here in the United States, just ahead of the U.S. close. And then you got some more RBA commentary later tonight. So just keep that sort of schedule in focus here. If you're in any of these crosses, specifically on the Euro, which we'll go over a lot of the Euro crosses today, that commentary could shake things up at 11:30. Adam says, good morning, Mike. You have to the right place from Australia. You have to come to the right place from Australia, he's saying. Adam, I'd love to one day. Cheers, man. All right. So let's jump right in. And again, here's a quick look at the relative performance for the greenback. You can see Aussie and Kiwi really the top performers so far in this session. Biggest loser is the Swissy. I'm not really a big fan of trading that, but the yen, with that dollar-yen, looking like we might be making a good breakout here. So we'll start off with the Aussie dollar-yen and Aussie-yen updates from last night. We'll take a quick segue and jump into the Euro crosses, Euro-dollar, Euro-yen, and Euro-CAD from the previous night. I do want to touch base real quick just on Kiwi-yen. We will go over the DAX and crude, which are also trades we've been covering. And as usual, guys, throughout the course of this session, if you have any questions, trade setups, feel free to throw them on the message board. Michael, my bad. I meant to say welcome to Michael. Oh, okay. Adam, or Michael, Adam is saying welcome from Australia. He's come to the right place as in SB Trade Desk. Makes more sense, Adam. Thanks for clearing that up. Okay, let's jump right in. So Aussie dollar, here's what it looks like, or here's what it looked like last night, and then here's what we look like right now. So basically what I was looking for is a hold right here at support, and that was basically just under the 76 handle. Okay, you saw former trendline resistance offering support. You had a nice swing low there from the last couple of days of trade back in September, and you have this sliding parallel extending off the lows that you made here in June. You can see those 2 June lows really catching that nicely, also confluencing on that region. Here's what the intraday chart looked like. There's that same slope. It turns out that that 76 handle or just below, like I mentioned, actually turned out to be the exact 618 retracement of that last stretch of the October range so far. And certainly you were looking for a hold here and the weekly opening range taking shape just above support. So I haven't had any positions on this since Sunday. I was talking about this in the webinar yesterday. I did have a long on, half got taken out at a quarter of daily ATR. The other half got stopped out at break even. There was another opportunity again last night to have a long position right off this, and we're now seeing a nice little rebound off that region yet again. So here's what it looks like on the daily chart. You can see a really clear-cut hold here. Again, that swing low from September 30th, former trendline resistance, and slope support. All lined up right there. So a nice pop higher. The one thing I want to note is we're not out of the woods yet. I do like the Aussie higher, but we just need a couple of different levels to keep in mind on the near term. First, the monthly open, which is right here in these dotted lines. Okay, that comes up around 76.52. So that's upcoming right now on the move higher. If we clear that, you got a clear-cut rally right into 76.80 into 76.90. Okay. So let me zoom this out real quick in a 4-hour chart. So basically what you're looking at is basic trendline resistance off the highs from August, another subsequent trendline resistance, if you take it from the subsequent late September highs, gives you this range right here that you see. Okay, so this whole range from 76, let's call it 78 into the 90 handle, you kind of need to be careful. Once we clear the monthly open, that's the next sort of barrier of entry to get this topside pop. All things held constant, looking higher above 75, basically the low that we made last night. And this is really the resistance region we need to clear to get that subsequent rally back towards key resistance, which for the Aussie is pretty well defined up in this region here at the 2016 high day close and a basic 88.6 retracement of the 2016 range, which also coincides with the highs from August. That gives you 77.35 to 77.56, key resistance. All right, so the game plan pretty much is unchanged. Favor buying weakness or fading weakness above 76. You need to see that 76.90, 77 barrier break to really get that upside thrust. See if we get another shot at that 77.35, 77.56 level. Any questions on the Aussie before we move off? Keep in mind tonight we do have Aussie CPI data, which is likely to be a market mover. Here's what that data is expected to look like. So we're expecting to see third quarter CPI mount uptick to 1.1%. Remember, the headline figure is this CPI year on year. The more important one, the deeper lying metric is this. Trimmed mean CPI is their version of our quote-unquote core CPI, which strips out food and energy. And core is expected to hold at 1.7%. So if you see an uptick here, okay, they might, let me take a step back. If you see an uptick here, that would be positive, essentially, for the Aussie, okay? If we get an at expectation print on the headline read, don't expect too much volatility. If we see a miss, you could see a pretty nasty reversal in Aussie. Or I would be looking in that scenario to fade an initial spike high if we do get it. All right, so keep in mind, again, that's on tap later tonight, 20:30 Eastern. And by the way, that economic docket is always available for you in the report. You can just click on it right here, and here's the expectations as you head into the read. Michael Schneider says, thank you, Adam. So Adam, just passing along the message. Nader says, good morning. Great to see you. Conwall, we'll definitely take a look at crude. I got it on the list. No worries. Came into nice support yesterday, Conwall. I don't know if you saw that. But we will take a look at crude for sure. Any questions on Aussie before we move off? Keep your eyes on those CPI numbers later tonight. By the way, anyone who's new to the room, hey, Mike, is for you as well. I see some new names in here, but at any point throughout the webinar, if you want to take a screenshot of the chart that you're seeing, you can take that camera button in the top right-hand corner of your screen. Go ahead and click on that, and it'll take a snapshot of the screen. So if you do need to refer to these charts, throughout the course of the trading day, you can feel free to do so. Okay, let's move right on. We're making good time. Next up on tap from last night was dollar yen. And the dollar yen breakout for me seems to be materializing. The only thing I don't like is the fact that the breakout's kind of muttering higher. Typically, if you're seeing a breakout of a key region, you want to see that rally really start to gather some momentum. You're not really getting that. So I'm a little bit cautious. As a disclaimer, I don't have any positions open on the dollar yen yet. I would love to buy a pullback if we get an opportunity. But here's what it looks like on the daily chart. Okay, keep in mind this long-term formation that we've been following off the 2015 highs. Okay, you have that median line right there, sliding parallel, which is currently being broken or being tested as resistance. Aside from that, okay, you can see really nice touches of this ascending formation off the low. Okay, and this topside breach here, I do have 104.86, which is definitely a level we need to pay attention to. That's a 100% extension off the low. 104.86, once we clear that, there's really nothing until 105.55, 105.80. And this is going to be a more critical resistance range. You're looking at the high day, well, let me take a step back. You're looking at the May lows. You're looking at the high day close from July, and that coincides dead on with a basic 786 retracement of the decline. So huge region of resistance here for dollar yen, much higher, but first things first, we got to get through this region. Here's what it looks like on the scalp chart. Okay, so here's the 4-hour. Bring it to a 2-hour. Look a little bit at intraday price action. So here's the start of the week. You saw that median line again break. We tested it as support and moved right off. So that yesterday, as I noted in the report, that was an encouraging development. Okay, that we came through it, tested it as support and moved off. And the 618 was offering some resistance. You're seeing that break right now. Again, I do like this stretching into 104.86. You want to stay constructive while above 104 essentially. So as long as we stay above that 104 handle, again, that median line and the upper median line of the descending formation coincide right there with that swing high from earlier in October. All right, so maybe a pullback into this region to offer some longs and want to stay constructive while above the 104 handle. Topside targets 104.86. Big region. You might see a real nasty pullback from there. You stay constructive above here, and if we clear 104.86, free sailing to 104.50 or 104.41, 104.80. Big region of resistance. That's this part right here. In fact, let me adjust this real quick. There we go. Steven, can we go over Euro Yen when and if we have time? Absolutely, yeah. That's actually next on tap, Steve. It's on the list. Actually, we'll go over Aussie Yen, then we'll jump into Euro Yen. So Aussie was number 1. Any questions on dollar yen before we move off? That's number 2. I'll just touch base real quick on Aussie Yen, and then we'll jump into some of the Euro crosses there, Steven. So dollar yen, looking to stay constructive above 104. Let's see if we can get a pullback here in U.S. trade to kind of try to fade that weakness. But looking like we're going to attempt to make another breakout here. If we hold above, by the way, if we close above 104.47, for me, that's all the conviction I need to continue favoring the long side. If we close below 104.47, I would be cautious about trying to press the longs. Okay, keep that in mind. As far as the dollar yen is concerned, do keep in mind that we have major U.S. data still on tap later in the week. Obviously, durable goods is going to be something we'll be looking at tomorrow morning. But more importantly, the GDP read, third quarter GDP read that is released on Friday. Here's what those numbers are expected to look like. Steven says, close on what time frame? So Steven, anytime I say close, I'm always going to be assumed that it's the daily close. So if I'm looking at this daily chart here, a daily close above this level certainly would keep the focus looking higher on dollar yen. Make sense? He says, got it, right on. All right, cool. But as far as the U.S. data is concerned, here's what the economic docket looks like. Durable goods, like I said, that's on tap on Thursday, excuse me. We're expecting to see a little bit weaker of a read on the September preliminary read. Cap goods, non-defense, which is usually a good gauge of business investment, is also seeing a pretty big contraction here for the month of September. So this is the preliminary read, the first read. We'll have to see how that pans out, but that is on tap on Thursday. The more important read is Friday's GDP. And we're expecting a nice uptick to 2.5% from 1.4. Also keep in mind on the same day we get the core PCE, which is the Fed's preferred gauge of inflation, and the advanced read for the third quarter is expected to soften from 1.8 to 1.6%. Not a welcome development on the inflationary front from the Fed's standpoint. So specifically for dollar yen, who tends to be a very strong reactor to U.S. economic data, keep that in mind, especially if you're holding longer term yen positions. Towards the end of the week is really when most of the event risk will start to surmount here on dollar yen. Okay. Right on. That was dollar yen. Number 3, quick look at Aussie yen, which has been a trade I've been following as well. I highlighted this last night. Here's what Aussie yen was looking at, or it looked like last night. Here's the daily chart. And the basic premise is to look for that stretch possibly into 80.36. Just below it, you have the 200-day moving average right here. 80.36, 80.37 actually ends up being the exact 618 extension, not from the Brexit low, but from the July low. So here's what that looks like. See those reference points? 1, 2, 3. That 618 extension takes you right into 8036. Just below it, 8013, you have the 200-day moving average, which we haven't touched since way back here in April and March. And then you have the upper median line parallel. Check this out. Long dated, multi-year median line formation. This is off the 2014 high. You could see the upper median line parallel really clean. Resistance, resistance. That's right there. Okay. Again, the 618 extension and the 200-day moving average. So you got a lot loaded up right into, let's call it 80-20, all the way up into 80-40. Big region of resistance. So we're looking higher into that region. This is going to be likely a major inflection point, meaning I do like the broader upside story for the Aussie yen, okay? And I do inevitably want to see a breakout out of this region. But near term, from an intraday trading standpoint, you might see some resistance up here that might offer a little bit of a kickback to get back long, trying to get that breakthrough. Here's what it looks like on the near-term chart. And here's what we looked like last night. All right, so basically we were coming into resistance at 79.50. Like I said, first things first, that's the level that we needed to get through, that 79.52 level. We finally cleared it. Initial targets at that point were 79.90, which we just hit, okay? And the October high comes in at 80.02, followed by, I forgot the decimal point there, 80.17, 80.37, which is this point right here. So keep in mind, let's clean this up real quick. This formation at this point is null and void. Don't need that anymore. We're now checking this formation, which was the 79.90 target, which we just hit. If we clear this, we're going to go ahead and delete that and look for that rally past the 80 handle into this key region of resistance. And again, so critical on both a daily and an intraday standpoint. Even within the confines of the ascending channel formation, channel resistance is there right now as well. Okay, so either way you slice it, you know, I'm looking higher in Aussie yen. I'm looking to see a reaction off 80.36. From a scalping standpoint, again, if you see momentum really stretched, it might be a decent short-term scalp against the rally. But largely speaking, I'd be looking for a more prominent pullback to offer some entries on the long side, trying to get the breakout. So you're probably asking yourself, well, Mike, what levels should we keep in mind if we do get that pullback for the entry? Ideally, you'd be looking for a move into this. This level right here. So the swing high from September, okay, that gives you like 79.13. $79.15. I want to stay constructive basically well above 78.72, guys, which is last Friday's low. So this is the bullish invalidation level. This is an area of interest for possible entry on the long side. And then you got to watch for that key resistance breakthrough on 80.37 to really open up the top side objectives at that point. Any questions on Aussie yen? If you're holding long exposure on this, you want to kind of start to maybe taper some off here at that next target at the 80 handle. More so here for sure, but I would have stops at break even once we get into that 80 handle for Aussie yen. Would you be looking for long triggers also from 79.51? So I would be looking for a reaction there. So here's a good question, Eileen. On the pullbacks, all the levels are in play, guys, especially on the intraday charts. So sure, you could see a reaction off that level, but as always, right, we're going to be looking for signals and momentum. We'll be looking for near-term price action. I'm not going to just buy a drop right into 79.50 off the bat. More so, I'd be looking for lateral support from a previous swing high or a previous major key level, and that still kind of highlights that 79.13, 79.15 region. Eileen says, okay, makes sense. Thanks, Aaron. More than welcome. So let's see. We are getting, and this is something I was looking at yesterday too. To start off the week, I didn't highlight this because I wanted to see if we can get a dip into this trend line. same slope, Friday's low, and that's why I had that highlighted. I kind of wanted to see if I can get a long entry from there. Just on account of the divergence that we're putting in the daily chart. Remember, these divergent signals below 70 tend to be pretty strong. Price action making a higher high, the oscillator making a lower, slightly lower high, but certainly suggesting that near-term momentum may be waning. So the ideal scenario for me would be maybe on Aussie CPI tonight, you get a spike into that region, a pullback into channel support or slope support, and then an opportunity to try to play that rally through the breakout. But the long side or the long bias is at risk heading into 80.36, 80.40. All right. That is Aussie yen. Any questions on Aussie yen before we move off? It's number 3. All right, going once, going twice. Number 4 will be euro dollar. Here's what euro looks like. So those were the updates from last night. Here is what the update from the previous night looked like on the 23rd. All these trades are still kind of in play. So euro dollar, I'll touch base on that in a moment. I guess we could just cover it real quick. There's really not much to cover. The only thing you're looking at with the euro is the yearly open, which is offering some support in the near term. It's dribbling below and kind of doing its dance here. So I don't really have a play on the euro. Guys, when the contraction, or the range rather, contracts to this degree, look, you can play the range, but our responsibility, our best opportunities are to play more clear-cut directional trends and more clear-cut ranges. Something like this, I could see this thing rallying back into the median line before breaking lower. Long story short, a drop into 107.76 for me would be pretty significant. I'd be looking for more meaningful support down there. But in the meantime, I don't really have a play on this, nor am I interested in scalping on the intraday. So just keep that in mind. If you feel, or if you see something that looks appealing to you, I'm trying to play this range, sure, but it's super tight. My preferred play on the euro is still going to be the euro yen. So if there are no questions on the euro, I'm just going to move off from here. Keep in mind, nothing's changed as far as the levels highlighted here earlier in the week. You're still testing confluence support right now. If we do clear that Friday low, look for that drop towards 107.76, okay? Right now, I'm kind of not looking to do anything while we're in this congestion range, bearish below 109.30. All right, again, the near term, here's what the 60-minute looks like. Or this is the 2-hour, but not much change. You're looking for that drop into 107.76. Soft target at 108.25, but this is really the more key support here for euro. All right, it's hard to justify, guys. You're probably thinking, well, Mike, you seem pretty bearish on this. Why aren't we short? It's hard to justify taking a short at this level, okay? You're at the yearly open. You're at slope support. I'm not in the habit of selling at multi-month lows. So unless we get a rally to 109, even if this breaks down, I'm not going to chase it. I'd be more so looking for that 107.76 to see if we get a reaction down there. So the preferred play on the euro is euro yen. It's number 5. Here's what euro yen looks like. So Steven, this is for you, buddy. If my chart loads. Sorry, guys, just give me a second. It doesn't seem like this thing wants to load. Okay, there we go. Let me just save that. Something's amiss here. I'm just going to refresh the page real quick, guys. Question here, where did you get that fib start for the 764 on euro? I'll tell you in just one moment. Oh, this 764? So this one, Eileen, extends off the lows from December. So that's this low here of last year. Okay, 764 coincides dead on here with not only that swing low that you made in January of this year, but also that median line for the current operative slope. Make sense? Yeah, you're welcome. So Euro Yen. Here's what Euro Yen looks like. And again, this is my favorite Euro pair at this juncture. I do have us at near-term resistance. We were looking to play this. Here's what Euro Yen looked like as we wait for the chart to load here. Here's what Euro Yen looked like earlier in the week. We highlighted this back on the 23rd. We were talking about this major trendline support. Okay, you had a basic long-term multi-year median line formation off the 2011 lows. That's what you see here in blue. Okay, now you had some contentious breaks here, but they've pretty much all been recovered within a day or two maximum. And then you have basic trendline support in red off the lows from July. One touch, two touch, three touch, boom. So inherently, momentum is at 40, price is at support. You're looking for a support hold at that region. Okay, so on the near-term chart, here's what the scalp looked like. Again, that same slope support. We're opening the week right above that, basically at 113. And you had a real clean-cut bisector here, a median line for the slope that we've been following. A break above that, we cited targets at 113.62 and 114.02, okay, which would be a basic 38.2. Here's what the scalp looked like. There are those two topside targets. Here's what it looks like now. Okay, so you can see that the rally has pretty manifested itself pretty nicely. 113.62, by the way, is not just this nice pivot in price, swing high that we made back on September 23rd, break, support, support, support. There it is again, but it's also the monthly open, the exact October monthly open. So you broke through that. We're testing some slope lines here, which I think could offer some kickback. You want to stay constructive above 113 still. Not a damn thing has changed, but this is really the range that you need to clear, to get a more prominent rally here in the Aussie yen. So long story short, near term, I do think you probably see some weakness against this trend line. You can see the last time that we tested it was a pretty radical pullback, but obviously this was data driven. Either way, that was the ECB. Either way, I'd be looking for some resistance here on a pullback to offer an opportunity to get back on the long side. You're constructive. Now we bring up our bullish invalidation from 112.62 right up into the 113 handle. Keep in mind, besides that 786, besides trendline support, you also have the basic and objective weekly open right here. So in all my scalp charts, Mike Schneider, you might want to note this as well. On all my scalp charts or the intraday charts, Mike, you'll see that the monthly opens are highlighted by these purple dots, both on the daily chart and the intraday charts. And on the intraday charts, you'll see these gray dots, which dignify the weekly opens. And we like to use these levels a lot of times support, resistance, sort of pivot levels. So keep that in mind. Stay constructive above 113. You need to clear 114.02 to really clear the way for further advances. 114.45, 114.65. More important, 114.88. All right. Cheers, Mike. Any questions on Euro Yen? Steven, this was for you as well. Does that make sense on Euro Yen? It's kind of my favorite Euro cross at this point. I'll take a look at Euro CAD in just a moment, which we also highlighted on Sunday, but Euro Yen is really, that's where the juice is at. And specifically, since I do like the dollar yen trade, which has been fizzling out, Euro Yen has been a decent way where I can play the yen, outside of the dollar risk. All right, that was number 5. Number 6, Euro CAD. Just a quick touch and look. Steven says, yes, looking to see what it does around 114. Yeah, me too. Big level. At least this is the first sort of threshold where you'd start to look for some a tell, either a jackknife reaction to the downside. By the way, if you do get a stretch higher and a reversal in U.S. trade, first thing you want to do is just tack on a quick retracement, look for that 50, look for the 618, and if you do that, it still highlights a region right around here. The weekly open, slope support, maybe the opening range high initially for the week, but that gives you like 113, 113.20 as an area of which we'd start to look for some, excuse me, possible reentries on the long side. Looks pretty good though. Long-term structural support here. Let's see if it materializes into anything. Next up on tap is Kiwi Yen. This is Euro CAD number 6. And here's what Euro CAD looked like earlier in the week. Okay, so the basic premise of this trade, by the way, if you remember, we highlighted this. Well, we've been tracking this one for a couple of weeks now. So here's what it looked like back on the 20th. And in fact, we can go back even further, back on the 19th. It had just made a big test of a major key support. That key support was defined by basic trendline support off of the December low, tested again in April, tested again in June, July. Here we are again. And that lined up perfectly with the low that we made last month. So right off the bat on that spike, we closed above the trend line. It's keeping the focus higher, and we're looking to play that rebound. So that was back on the 19th. Fast forward to the 20th, you saw the rebound did break through the weekly open, and it kept the topside bias in play. So now we want to stay constructive above 143.80, which again is this level right here. Looking to play into 145.16, 146, 145.95. Fast forward to the 23rd. Here we are when we started the week. 145.16 is out. Next top side target 146, 145.95. Here's the turn just ahead of that level last night or yesterday. So at this point, you're seeing that slam to the downside. You had a nice support trigger in momentum that gave out. At this point, you're looking for support right back at former resistance. And that coincides on this pivot we've been following at 144.32. So do like the EuroCAD still for a topside move. Near term, the immediate risk, I think, is still for a drop into this region. Key resistance that we need to clear still 146, 145.95 here to get the go. All right, so a decent Euro cross, still not my favorite. I still do like Euro CAD, or Euro Yen, excuse me, as my favorite Euro cross, but this has continued to pan out pretty well, and the levels continue to play out real well. So near term, stay constructive above 44.32. Bearish, or bullish, excuse me, invalidation, it still has to be at 43.80. Okay, as long as we stay above this daily threshold here, I'm still going to continue to favor the long side. Whoops. For now. Questions on EuroCAD before we move off? All right, that was number 6. Number 7, last but not least, before we jump into some of the commodities, is Kiwi Yen. I just wanted to give you a highlight of this because that was also highlighted on Sunday. Here's what Kiwi Yen looks like right now. If you guys remember last week, we were talking about major key resistance here at 75. It was basically 75.08 into 75.30 or so. This is exactly where this thing capped out, okay? And certainly we saw the turnaround to the downside. So for Kiwi Yen, the only thing I wanted to highlight was this. Where art thou, Kiwi Yen? Okay, there was that key resistance that we turned from last week. Basic 764 retracement from the decline off the highs that we made back in September. You can see that the 200-day moving average has continued to offer resistance specifically on a closed basis. It's really been unable to mount any significant or meaningful rally through that moving average. We're testing it again as resistance right now. So what does this mean for the Aussie Kiwi moving forward? Look, I think he needs to see a little bit more of a setback from here back towards the median line, but I do continue to favor sort of playing this consolidation. I think you make another low and you look for a rally, or you look for, excuse me, a sell-off down towards 73.87. Basically the lower parallel. Here's what the intraday chart looks like, by the way. This is what we've been following since last week. So maybe sort of a pullback into the median line here, then a stretch higher, test this before you finally make a little bit of a deeper low. But I am looking for a deeper low before we start to turn higher. A little bit of a different play because I'm liking the yen weakness, but at the same time, I think Kiwi is poised for further weakness. Here's Kiwi dollar. But in the near term, even on the Kiwi, you could see a scenario where it rallies back into resistance before moving off. So just keep that in mind. Kiwi dollar and Kiwi yen are sort of on the same path here, both coming off near-term structural resistance. So if Kiwi weakness is going to prevail, you'd want to see that 75 barrier hold as clear-cut resistance on Kiwi yen. Any questions on that? Levels remain unchanged from earlier in the week. We basically opened up here. We're testing this resistance right now. Okay, so those are sort of the main highlighted trades that we've been following so far to start off the week. I want to open it up to your questions, guys, as usual. I know Conwall wants to look at crude. Conwall, did you have any hard commodities that you wanted to check out? I have crude and DAX as things I want to cover. Let me know if there are any other hard commodities, gold or silver. No change on any of those outlooks, by the way, but here's what crude looks like. Yes, Conwall, we'll take a look at silver for you, no worries. So, crude. Man, this thing has been pretty clear cut. I don't think it has upset, excuse me, our levels just yet. So remember this steep slope, as I always say, I really hate playing these really steep ascending slopes. They typically don't stay fruitful for too long. That being said, this is the operative slope that we've been working with. Let me just make that a little bit thicker for you. This is the operative slope we've been working with. Okay, failure to turn ahead of the median line here certainly suggests some bearish implications. If you look at the momentum signature, you've been having waning momentum for the last 3 peaks as we've made a higher high, higher high, higher high, momentum making a series of lower highs. So yes, it's at risk for a little bit of a setback here. As we said yesterday, near-term support at the median line, we practically came right into it and rebounded higher. And here we are looking to check it again. So for me, I have this sort of as a near-term consolidation in crude. If we do see a downside break, okay, you'd be looking for support. Bearish invalidation or bullish invalidation still is down here. This is the monthly open. This is the September opening range high and former slope resistance. Now support. Okay, so that's the risk, Conwall, if we break below yesterday's low. Near-term resistance hadn't changed. 2016 high day close, 51.40, 51.46, and certainly the swing highs from back in June. That gives you 51.65. So in fact, let me do this. I'm going to go ahead and clean this chart up just so it's easier for you guys to view. We don't need this formation so far per se. Just highlight this slope line, which is the same operative slope. We'll continue to watch that near term on crude. So for the intraday chart, Conwall, remember this pitchfork we added yesterday? I like it. I'm still going to work with that right now. Let's see if the 50 line offers anything. So the 618 line of the range of the upper quadrant here in the lower quadrant offers to be a nice pivot here, support here. So we'll keep that in view, but basically near-term support, again, that Friday low, a break below that, you're really looking for a drop sort of into this region here. Basic 236. Actually, let me adjust that to the high. Gives you this region here. 48.78, 48.90 is an initial target on the downside break. Conwell says above 50.74. So on a topside break, if you're looking for above 50.74, oh, excuse me. I have resistance just a little bit higher. So let me say this, 50, just objectively on this, Conwell, 50.94 here is actually the weekly open. You can see those gray dots there. So I would have that as near-term resistance, okay? Backed obviously closely by that median line, the 2016 high day close, and this key region of resistance. So I think as far as the resistance targets, just watch the weekly open and then key resistance up here at the high day close. Near-term support, like I said, Friday's low, a break there. You'd be looking for a drop towards that 48.90 level, 48.80. Conwell, does that make sense? So near term, first things first. Near term, look for some support near this median line. Immediate focus is lower into this region. And we'll see what happens at that juncture. All right. We've been making a pretty good move here on crude. It's been pretty clear, except obviously for the last 48, 24 hours. So Conwell, if this thing starts to chop some more sideways, sit tight. We'll get some clarity on it, I'm sure. It's been a really clear-cut play since the break here, but you're seeing some waning momentum. You're seeing some chop action. So just, might be a good time to lower your leverage until we get a little bit more clarity on whether this consolidation is going to follow suit lower or not. As far as crude is concerned, any questions on crude? Henry Vanderplag, great to see you in the room, sir. Wants to look at gold. Mark, Lavender, Michael, take a look at dollar CAD. Thanks if you have time. Sure, we'll take a look at Loonie as well. I forgot that one. Okay, so first things first. Crude was number 8. We'll do silver number 9. And then number 10, we'll do gold. So number 9, silver. Here's what silver looks like. Levels are pretty clean. I don't really have anything to add from last week. Hey, Conwell, I appreciate that, brother. Your kind words, man. Appreciate that. But as far as silver is concerned, there's really no change to the levels that we were looking at last week, guys. Scratch this at this point. Maybe stretch it to that low. Highlights key support here still. But yeah, I mean, for silver and crude, look, they're both sort of in consolidation at support. For silver, it's a little bit more of a critical support structure than it is for gold. I'll bring your attention against that 2016 trendline support, very, very basic off the yearly lows. Continuing to guide price action here, you have the 200-day moving average, which even on a stretch basis has kind of caught the lows here. And basic key resistance that we've been highlighting since last week is still 1786, guys. That's exactly where we capped out yesterday's advance. At this point in time, now you also have, besides that 618 retracement of the advance off the lows of June, you also have the median line off the highs. So the concerted median line is right there as well. Okay, so your range of influence, or the major key range that you need to watch for silver, is 1740 into 1785, and we'll look to see a break of that range for some directional guidance. Again, if you put a bullet to my head, I would say this thing would probably pop through the highs into this region before turning lower, but at the end of the day, play the range until we clear it, okay? No change to any of the levels or outlook from earlier in the week. Questions on silver? That was number 9. Looking ahead real quick to number 10, gold here. Very similar setup. Little bit of a difference in that it's not as big a support structure in my humble opinion. You're kind of straddling this median line formation that we've been following off the lows from last year. Also, this is a basic 38.2 retracement of the entire advance off the December lows. Near-term resistance, you can see that the 200-day moving average has been offering that, followed by this former support, now resistance. So a little bit of a tighter range in gold. For gold, I do think it reaches lower. You kind of want to see this thing drop near 1220. 1210 would be sort of a gift, in my opinion, if we get that drop for a long position. But I do think the risk for gold still remains way to the downside. Even if you kind of spike higher, the only thing that would put me constructive would be a break above 1302. I know it's a far away from where we are now, but that's the only thing that would make me bullish gold. That being said, I don't really have a play here. You know, as I always say in the webinars, guys, it's not just about knowing the directional bias in the right direction. It's also about you having a game plan, a setup. Where's your risk? Where's your target? And when you see a consolidation like this on a trade that's pretty stretched out, you know, I tend to sit on the sidelines and look for a little bit more technical clarity down the line. Henry says, thanks. Hey, you're more than welcome, Henry. I hope that offers some clarity on that, man. Again, typically we follow gold very closely. So, you know, when the bias is a conviction bias, I'm first one to tell you. But right now, I'm kind of a little bit more hesitant to get involved in the gold trade. If anything, I'd be more prone, if you put a gun to my head, like I said, to get into silver. Conwell says, actually, your levels are very helpful in playing. Thank you so much. I appreciate that, Conwell. Cheers, mate. Last but not least, I do want to take a quick look at DAX. This is a equity indice we've been following exceptionally close. You know, the breakout potential that we highlighted last month has finally started to materialize. You're seeing it fizzle out here today as momentum is testing 60. So you could get some back and fill before it moves higher, but you look to stay constructive here in the DAX. So here's the monthly open. Here's your monthly opening range set just below resistance. The range lows set just above median line or structural support. And we said, look for a break of this range. The broader upside bias is in play. If we get a topside break above the 2016 open / high day close at 1688, 10,688, 10,730, you look to play a stretch towards 10,953, 983. And I still think you look for that. So the yearly open is being tested. It's struggling here, which is why I think you could get a near-term pullback as momentum is testing 60. But at the end of the day, you look to buy that pullback while above the monthly open, inevitably looking for that stretch into 10,983, 10,953. Watch today's close. I want to see it continue to hold above that 10,688 level. So sort of like the dollar yen, right, where you're getting the breakout, but it's sort of meandering higher instead of giving us kind of that pop through. So a little hesitant. Use some caution here on the entries. Again, keep in mind that we're heading into the end of the month. This is the last full week of October trade. So as you head into Friday, you know, expect market liquidity conditions to start to be an issue. You might see a little bit more volatility in intraday price action. That being said, looks like we've cleared the weekly, the monthly opening range. We want to stay constructive here in the DAX. Questions on the German 30. That was number 11. Okay. Mike is asking about the US 30. So Mike, I don't actually have anything on the Dow that I've been following with interest. I kind of bring these to your attention as markets dictate. So when I do see, let me bring up that chart. When I do see something, I'll definitely point it out to you. But as far as the Dow is concerned, you know, this is just a chop fest. I don't really get involved when the market's doing this. For an intraday guy like I am, there is opportunity in just playing the range. But for me, even that's too contractionary at this point, just way, way too tight. So if anything, again, you're in a consolidation here, near term. Okay. Typically, these are continuation patterns, but I've seen them be terminal before, as I always tell you here in the room. See if I could just put something together really quick for you to highlight at least the major levels. Whoops. Okay. I'm not going to stress that right now, but this is what I would say. So here's your monthly open. And all this thing has done, Mike, is put in the monthly opening range. So again, classic opening range strategy. The market puts in a high, puts in a low early within the first week and a half of trade. Heading into the latter part of that month, you look for a break of that range to validate the near-term directional bias. The entire month of October has been governed by these 4 trade sessions, and that range still continues to hold. So look for that range to continue to consolidate. Typically, this consolidation features do break, 10, 20% ahead of the apex. So you could see some more sideways chop action here into the end of the month. I don't know. All I can tell you is that from a momentum standpoint, you're pretty much indifferent. This is kind of a neutral momentum signature. Slightly bearish, sub 50 here. And from price action, you haven't even cleared the monthly opening range. So there's nothing here for me, Mike. I mean, like I said, once we get some clarity in near-term price, I'll be the first one to kind of pop this out and highlight it for you. But right now, kind of think you still need to let this thing clear out some of the weak hands before you make a move. Does that help, Mike? He says thank you. Hey, you're more than welcome, man. And as always, feel free to throw out any questions you guys have. Even if it's not something I'm personally following, we can certainly put something together here. So, Mr. Lavender, haven't forgot about the dollar CAD for you, buddy. Here's what dollar CAD looks like so far. So I'm sure some of you saw the radical price action that we saw last night. Dollar CAD seemingly falling off the side of a cliff there for a couple of minutes ahead of the Asia Open. It's funny, I just came out of the gym last night and or in the evening and kind of was just shocked. As a disclaimer for you guys in the room, I actually did have a short on this in the U.S. trade session as this thing was trying to rally into 33.82. I did take a short. I got stopped out right above that 33.83 handle. May have played it a little bit too close to the chest. I literally got stopped out like 3 pips off the high. And then this thing, obviously collapsed. That price action certainly to me is suggestive, and I say this with a grain of salt, that this thing's going to move lower. Now I know, every time we've tried to call a reversal in dollar CAD, it's materialized, but then it just fails miserably. Even last week, if you guys remember, we were involved in the short side on the downside break below 31.40 here. That, again, right on the BOC, reversed sharply and then took out the highs again. So I'm very hesitant to call a high in dollar CAD. But that said, there are some things you want to pay attention to, namely continued ongoing divergence in momentum as momentum fails to clear those highs, as price action presses a new high, a new high, a new high. So momentum is getting tired. Secondly, this completes now, as I told you guys yesterday in the webinar, a big fib extension. Off the yearly low, 2 equal legs up, 100% gives you 33.82. Slope support, or slope resistance, excuse me, of the same operative slope we've been following, extending off the highs that you made in early September, on a closed basis, continues to be respected as resistance. So again, I don't want to get aggressive and start trying to call a reversal. I don't want to start just, calling highs and trying to call peaks on trades, but it's important that we recognize when there's an exhaustion trade that's sort of manifesting itself. And that's what I think is playing out here. I would like to take another stab at some shorts here in U.S. trade today as long as we stay below 33.82. We do need to see a break sub 33, essentially yesterday's low, the opening range low of the week, to really validate a reversal. Okay, And in such a scenario, if we do get that validation, quick retracement off the low from last week gives you some clear-cut targets at 32.48, 32.50, 32 handle, okay? And key support still remains unchanged down here, basically 31.55. All right, so that's sort of an update on dollar CAD. I was frustrated yesterday that that thing collapsed after I had gotten stopped out, Mark, but still like it. I still think that you're coming into some exhaustion both on the daily chart as long as you stay below 33.82. I think the risk is for a pull lower. Look, if it breaks the highs, out. Don't even touch it. I'm not interested in even chasing it on the long side. So that's sort of my mindset with dollar CAD at this point. Makes sense? He says, thanks. Crazy trading. Yeah, it's been a little bit. Dollar CAD's been a tough one to call. I completely grant you that. I didn't see that rally last week sort of stretching into these highs, right? Big, big, big move, especially for dollar CAD. And the ATR completely blew out. So for me, I kind of really want to get a little bit more price action under my belt for the week to get a little bit more of a conviction bias on this. All right, and that is dollar CAD number 12. That's pretty much everything I had on my end, guys. If you do have any specific trade questions you want to review, go ahead and throw them on the message board now. Other than that, we'll go ahead and wrap things up. Again, keep in mind we'll be on board tomorrow morning, 8:30 Eastern, for another intraday strategy webinar. As far as the U.S. docket's concerned for today, like I said, there's really not much on tap. So keep your eyes towards that CPI data from Australia later tonight, and Aussie yen and Aussie dollar of particular interest heading into those releases. All right, guys, best of luck trading. I will see you all tomorrow morning. Till then, cheers.